Hi, everyone. My name is David Kosmeter, and I am the creator of TimingResearch.com. This is the Crowd Forecast News show for October 9th, 2017. You may have noticed that I have switched back to numbering this show by episodes instead of just by the report number. So I hope that's not confusing to anyone, but this is the 156th episode of the show, and we will be talking about the 211th weekly report. So if you haven't had a chance to take a look at this yet, you should be seeing it on my screen while I'm talking right now, but you can also go to TimingResearch.com and download the PDF there. For those of you watching live, you should see the live chat section of the screen on YouTube. If you have any questions or comments, you can type them in there. And I have Dave Landry back to moderate today, so I'm going to go ahead and turn it over to him.
Thank you, Dave Kosmeter, and thanks to Timing Research for having me back once again. Looks like we have all veterans here today, so I think everybody knows what's going on. One thing that we did add a while back was a trade of the week. So if you have a trade of the week ready to go towards the end of the show, we'll let you know about that, and or let us know about that when the time comes. And also, people tend to like when you share charts. So for the early questions, we're not going to share charts, but once we get into developing events and trade of the week and things like that, feel free to share charts. In fact, I would encourage you to do that. Sam, you're going to be up first here. First question is, what direction do you think the S&P index will move from this coming Monday's open, which obviously today's open, till Friday's close, and rate your confidence to your answer to that question by estimating the probability you have correctly predicted this week's market move. Sam, can you hear me?
Yeah, I can hear you. Okay, so yeah, I do believe the S&P 500 is going to be declining this week, and I would attribute that to a 60% probability. So not a very strong conviction there, but we'll talk about the reasons later, I'm sure.
Okay, cool. Yeah, absolutely. All right, Neil, you're up next.
Dave,
give me a quick sec. I'm just looking up a chart for my final answer.
Jim, we'll pop over to you while we wait on Neil.
Sure. Okay. Well, with the markets up where it is here, there's a possibility that I think that it might roll over, but I saw the consensus was 70% looking for a down. I think that's a little on the strong side, more like 50-50.
Okay.
Hey, Dave, I think you skipped the introductions for everyone too. So.
Oh yeah, I'm sorry about that. I'm out of it today. Neil, let's go to you, and then we'll go through the introductions too.
Sure, Dave's heard this many times. Used to be a broker right out of college, and it was the best job ever because they give you a free lunch every day, and the lunches are really good because the mutual fund companies want you to push their funds. That was a dream for me, man. I'm like, oh, this is a dream job. But I realized very quickly in our training that we got these million-dollar producers come in. They talk to you. What a $1 million producer means is that they generate $1 million per year in revenue for the firm. They get 40% of that. Wow. And yeah, maxes out at 43, I think, if you're real top notch. So what you do is you get your assets under management. You charge, 2 to 3% a year, and you just sit back and collect all the money. And so really what they train you to do is get assets under management, all about assets under management. And what really got boring for me was that they keep pushing you in this direction of you're not going to be a stock picker. You're not going to be managing portfolios. You're just going to be gathering assets. And to me, it's great for some people, and it wasn't for me. So I got out of that. And then I've been did some other stuff in the business field for a while. And now I do this. So, but I still use the charting that I learned from a seminar I did with another office in my firm called Point and Figure Charting, which I think is best charting in the world, the X's and O's, and I combine that with the Ichimoku cloud, and we've timed every crash since several years. So that's what I do for my clients: send out a tight knit portfolio of our best picks.
Cool. And let's go ahead and get the first two questions knocked out while we got you back here. Which direction do you think the S&P will move this week, and then what's the confidence in that move?
I'm in sectors that are sort of not really correlated to the S&P 500. And But the 70% down is really big. So I'm almost going to want to go contrarian and go up for the week. So I'm going to go tiny little bit up, but don't be much in the market. I'm only going to go like 55%. So it's going to be a flat week. Don't look for big trades.
Okay, cool.
Contrarian.
Okay, Sam, let's go back to you. I'm sorry about the introduction thing. I was a little rushed this morning. Sam Bourgi of TradingGods.net. For those of us who don't know you, tell us a little bit about yourself and a little bit about TradingGods.net.
I'm a markets editor for TradingGods.net. We're actively involved in the volatility markets, trading VIX, VIX options, VIX futures, VIX ETNs. And we've recently expanded our universe of trades to also look at cryptocurrencies and Bitcoin. So we are kind of looking in the alternative asset class as well, mostly focused on the VIX market. TradingGods.net, we have daily updates on volatility as an asset, as well as instructions on how traders can enter the market and diversify in vol. So happy to be back, and looking forward to the chat today.
Good. Do you have some information on cryptocurrencies on your website?
Yes, we do. We have regular weekly updates on the Bitcoin market, as well as a new training program involving Bitcoin and how you can diversify.
Cool. I may need to contact you offline, but thanks. Yeah. That's good stuff. Hey, Jim Kenney, another veteran of the show, optionprofessor.com. For those of us who don't know you, tell us a little bit about yourself and a little bit about optionprofessor.com.
Yeah, optionprofessor.com has been educating investors for well over a decade now, and I'm the content provider. And basically, it's DVD educations on all the different uses and risks of the options markets, using them as hedging devices, using them as limited risk leverage devices, and of course, cash flow devices as well. So there's lots to learn, as you always say, a lot of moving parts in options, and Option Professor can kind of get you down the road a little bit on that journey.
Yeah, you stole my little segue to you there. But you can tell I'm out of it today, huh? I'm Dave Landry from DaveLandry.com. I believe very wholeheartedly that you can only predict the short term when it comes to markets. It's sort of akin to predicting the weather. If it's cloudy and thundering outside, as I say quite often, chances are it's going to rain pretty soon, but you don't know if it's going to be raining this time next week or next year. So I truly believe you can only predict the short term. Unfortunately, even though short-term trading has less risk, you just don't make enough, at least longer term, and also something bad could still happen. So longer term trading, hard to predict, risk are very high, drawdowns are abysmal, but that's where the real money is. So the way I wrap my head around that is I take a short-term swing trade approach. I'm slotted as a swing trader, but I'll actually stay with positions as long as they move in our favor. We had one trigger back in February or late January, actually, and we got a swing trade out of it. And fortunately, we're still long that position, so we'll stick with them as long as they move in our favor. And I have a trading service that I put out daily where I do give specific picks along with the entries and initial profit targets and how to trail a stop, et cetera. And I run DaveLandry.com, obviously, and that's an educationally based website. We do a lot of trading psychology, money management, and also we focus on trend following methodology. I'm going to go back to you. And this is the developing events question. Faces the overall market. So let me get to that real quick. For your answer, please share what specific reasons you think the S&P is headed in the direction that you chose, which I believe was down.
Yeah, I chose down. I mean, I don't really have much conviction for that. I mean, looking at the performance last week, we saw 8 straight days of gains for the S&P. Usually gains of that magnitude I've found are then followed by a short consolidation phase or a pullback. I expect that to happen this week. Not a lot in terms of upcoming events, except for the FOMC, a few data releases. I just don't see really much impetus for it to continue higher this week, although this bull market has surprised us quite a bit. So I just think there's going to be a little bit of a pullback given the direction of the market over the past few weeks, and maybe it's time for a breather as we continue to march forward ahead of earnings season.
Okay. Neil, do you want to share a chart with us, or you have anything you want to add for developing events?
Yeah, I'll share a chart. Just a second. You can see this now?
Yeah, sure can.
Yeah, so this is the bullish percent. It identifies the S&P 500, what percent of stocks are on near-term breakout buy signals. You can see back here in August, it was all the way down. So this is a technical breakdown you see underneath the index. And then back here, it starts moving up. So this is quite strong, and there's a little bit of tiny weakness, but it doesn't officially turn down unless it reverses 6%. But I think we're just going to have really a flat week. It's one of those weeks, not a lot of up, down. And I just switched here to the 1 hour chart of the S&P 500. And so what I would do, as long as this holds above the 1 hour chart, I'm just going to be long the S&P 500.
Cool.
So that's what
the BP SPX that you were looking at.
Yeah.
Are there parameters you put in that in case I wanted to plot that on my own?
Yeah,
or is that just a standard indicator?
Go to stockcharts.com, and then I'll just do it here. You just type in the word bullish. It's my big secret, but everybody gets it for free here. And then you have all the bullish percents, okay?
Gotcha.
So this is really developed by point and figure charting, because on point and figure charting, it's an absolute or a not on a buy and sell signal, because you have, you know, grid format of X's and O's. But here's a really awesome one, a little bit off topic, but this is the gold miner bullish percent. Okay. So do you think you should be long gold stocks when 100% of all the gold stocks are on buy signals?
Gotcha.
In July, this is the 7 is July, in July 2016. If I overlap it, you'll see the GDX go way down. But then when you go back here to 2015, both these times it was at 0. This basically almost never happened. This almost never happens on the S&P 500, but in 2009 March, this hit 2% on the S&P 500. Can you imagine?
Wow, good to know.
But on these moves up from the bottom, we made 40% on Nugget both times, the triple Nugget, and this breakout here. So just type in bullish and you'll find it. And you can do X's and O's here, or if you go here, you do a linear format. But X's and O's. The
question was, there are no, you don't put any parameters into that though, do you? Is it just the default parameters, or?
It's default. Well, what you can do, if I go, like, let's say I'll go back to the S&P 500 here. The default is each box is 2. You can see 88, 90. What you can do is you can go here, user defined, change the box size to 1. But I would not recommend trading on that because it's dangerous.
Okay, gotcha.
And I've gone through it many times. And if you're thinking about maybe getting in, you see a little reverse 3%. Really, it has to be 6% for it to make much of a difference. And I've seen this indicator reverse 6%. Let's see. Up here in July, and it reverses down here, and then it makes this sell signal here. The next day, the S&P 500 is way down. I mean, you could have, the day this reverses into O's, you can buy puts. You make money almost all the time within the next few days. Yeah, because the guys on the CBOE use it.
Gotcha. Okay. Yeah. Jim, Kenney, let's go to you next.
I just was going to say on that gold miners thing, the GDX went down towards that 200-day average around 23, and now it's back above both the 50-day and the 200-day, trading up around 23.70. So it does look like there's some bid underneath when it did fall off there for a couple of days. So that kind of supports what Neil was saying.
Cool. All right. So what specific reasons did you pick the S&P?
Yeah, I mean, I don't have any really great reasons except for I've done a little bit of reading here and there, and it seems like when we break a round number of 2,500, the S&P can run 20 to 50 handles, which it's already done. And we've got the transports giving up about 150 points off of its high of 10,000. So there's a little bit of a turn down on the transports. And the VIX bottomed out in the 9, and now it's in the 10. So the VIX has picked up about 10% since last week. And I think it's all going to hinge pretty much on what happens here later in the week with this bank earnings stuff, and then all the consumer numbers coming out on Friday, CPI, retail sales, business inventories, stuff like that. And so if the news turns well, then obviously we could blow out the highs and keep going. If they sober people up a little bit, there's a gap at 25.40, 25.35 on the S&P, and it wouldn't be unheard of that we go down and fill that gap if the news is not as robust as it's been. But like I say, it's a very strong market, and obviously the impetus is for higher prices.
One of the things that, getting back to, I forgot to put my prediction in, but I'm going to go ahead and predict up, and that's just simply because I'm a trend follower. And many years ago, I tried to outsmart the markets, as I wrote in, I think, my latest column on my website. But I quickly learned that you're much better off making money than being right, or phrased differently. I'd rather make money than be right. And so I don't try to predict every move. I just try to follow along as a good little trend follower. And one thing that's really interesting in the S&P 500 is we have this nice persistent up move. Mathematically, linear regression, but I just like to keep things simple, but I'll plot a linear regression for you. And you can see that linear regression line just pretty much went right on top of it. What I like to do is draw a line through as many bars as possible. And when you can intersect the majority of the bars and you're in an uptrend like this, 20 days is ideal, but even shorter term persistency, as we've seen in here, about 10 days or so, can be very powerful. So I'm very excited about that. Also, as a trend follower, I'm not going to argue with new highs or try to pick a new top as long as the market's going to stay. I hate to use the word bullish. I don't want to label myself, but I'm going to stay constructive towards the market. And as far as put a gun to my head for direction, I'm going to keep saying up for now, and then I'm going to give that a 60% confidence rating on that. Okay, Sam, we're going to go back to you on this one. And it's a question about gold, if you want to pull the chart up. Do you trade or invest in gold in some form? Why or why not?
Well, I was more active in gold several years ago during what was a bull market for precious metals, more or less in the ETFs and the ETNs, as well as in minor stocks. Recently, obviously, gold has bottomed out these past few years. I am purchasing physical bullion from a long-term perspective. I guess that gives you an indication of where I think the market is going long-term. But it is one of the best hedges against risk, and it remains so. And for me, it's part of a long-term investment strategy designed to create value against risk. And from that perspective, I think physical gold is one of the best ways to realize that. So I haven't been actively trading in the market for a few years, ever since precious metals cratered there a few years ago.
Okay, so you're buying physical gold. Are you a bit of a prepper, or is that just a little bit of a hedge just in case? Or
it's a little bit of all the above. Definitely hedging. Obviously gold, bottoming out at $1,100, $1,200 is a prime buying opportunity. I think it's going to go up. When and what timing, it's really uncertain right now. It's up, I think, $9 today, but it's still gold below 1,300 is rock bottom prices. So,
gotcha. Okay. All right, let's go over to Neil next. Neil, do you trade or invest in gold in some form, and why or why not?
I purchase hunting knives so that I can sell them at big markups when everything hits the fan, but I will sell them for gold. Yes, that's my strategy. When gold was down, when the first ETF came out on gold, yes, I was there. I remember it. I mean, that was a bull run up to 1,800, and since then, in the last few years, we've just been doing these bounces. It's not something I want to hold in a stock trading account other than these big bounces unless things really get moving. But even then, I don't expect it to go up past 1,500. You want me to go more into this? We're long Nugget right now, and we're long GDX calls. We got in 2 days ago, but it's just a trade up to below the highs. But what I think is happening now with gold is Trump does not like Yellen for whatever reasons. Trump admitted to getting money basically for free to build his buildings with the loans that he gets, but he doesn't like it, and he admitted that. So what I think is going to happen is Trump's going to put a guy in the Fed who's going to slowly raise rates, and I'm not worried about the US dollar getting too strong because I think the rest of the world will be forced to raise rates also. No matter how they do it, they make their phone calls, whatever they do. Trump doesn't want low rates, and I think that's what's going to happen. Rates are going to go up around the world, and if people have to decide between the dollar and gold, they're going to choose the dollar. But if rates are going to go up, it's not going to be great for gold. It could go sideways for a real long time. I don't know about how down, but because I think it costs $700 to $900 to get gold out of the ground. But yeah, just trades for us.
Gotcha. All right, Jim, Kenney, same question.
Gold, I've always been an owner of the gold stocks as part of the portfolio. And you see all that paper on your wall behind you there, Dave, right?
Yeah.
They're all made out of paper, aren't they?
And well, I got one that's $100 trillion, but I don't think it's worth much.
Yeah, I used to have 50,000. I used to have 50,000 in Brazilian cruzados in a one bill that I keep. I always thought it would go one for one with $1, and then it never really happened.
I used to occasionally. I used to keep one of those in my wallet, and I'd throw it out at lunch. Hey, lunch is on me. But those were actually. I wish I'd have bought more. I bought those for $1 each. I think I bought 10 of them on eBay. And they're I haven't checked lately, but somebody told me a while back they were like $8 a piece. So they're in hot demand. So I wish I'd have bought a few.
I just got back from Sicily, and they are dying to go back to the lira because the euro is making their economy very rough because it's so expensive.
Yeah, and if a friend of mine's a landowner over there. He owns a couple of houses, and it would crush him if they went back to the lira. He'd be crushed. I mean, that
but the
keeps him
guy
up
who's
at
running
night.
a restaurant would get a lot more business, is what he was saying.
Yeah, it's good for the little guys and the small business.
Yeah, right.
Not so much for somebody who's accumulating.
The guy who was complaining was running an Italian restaurant with 5-6 seats open. You know what I mean?
Oh yeah.
Cool. At any rate, getting back to that, so I think obviously the amount of debt that's been created is just a joke. Argentina is selling 100-year maturity bonds.
No way.
So Lord knows who's buying those. And then you got Jordan and the Ukraine selling like 30-year bonds. Wow. And so it is just bond bonanza out there. And that's all debt, and the printing press, we have $14 trillion what central banks have put into different securities since the 2008 crash. So, this Bitcoin is not popular for no reason. And that's why you're going to have to put a Bitcoin on your wall as the new currency at some point, probably.
Yeah.
But a portion of your assets in gold, if deflation hits, like Neil was saying, and the rates go up, then obviously gold could blow out the 1,000 and maybe go down to 800 for all we know. But, my view is that, if it gets above this 1350 level, it could go on a bit of a run. And some people say when interest rates rise, gold rises. And so if that's the environment we're going to go into, then, maybe gold is not a terrible bet to have a rally in the next few years. As far as Trump's concerned, I think anybody who bought his bonds at Atlantic City knows his respect for debt. And as far as the dollar,
write off anything.
if you could get his buildings to go up, he wouldn't care what anything happened, So I don't think he's a particularly high respect for debt or high respect for paper currencies. So
if he wants to wipe out Puerto Rico's debt.
Yeah, right. And
he doesn't care who owns it. It's Goldman Sachs, whoever. I don't care. It's got to go.
Yeah. Imagine you own that debt and the president's on there going, you can forget about that money.
Yeah.
It sounds like an option that, had a few days left on it or something like that. So anyway, he's very cavalier about a lot of things. And I think debt and paper money would be another thing that he's cavalier about. So anyway, a little percentage into the gold stocks right now doesn't seem like the worst idea in the world.
Yeah, gotcha. It would be fun to get you guys together either online or not and talk about the cryptos one day, because that's something that I have a big interest in.
Let's do it
as of late, but it's fascinating, really is. It's getting to the question about gold. When I was a kid, I collected silver coins, and I used to go up to other kids on the playground and offer them like 50 cents for a pre-1964 or earlier quarter or some kind of premium. And I was buying up a lot of silver back then as a kid. And I was doing quite well at it until they got on to me, or maybe their parents, because they were probably going through their parents' coin collections. But anyway, I did accumulate a sizable amount, and then we had the silver bubble, and I thought I was a rich little kid, and then that popped, and that was my first lesson in bubbles. Well, I still have all of that silver plus a little bit, but I don't actively hoard it or do any prepping. I do a little prepping.
You're not going to playgrounds these days.
What's that?
Sorry.
I have a few thousand rounds, of ammo just in case, but I don't actually accumulate gold. Now, I do trade mostly the gold stocks versus the physical commodity. But I think, as Neil was alluding to, back in 2016, if you could see my chart, we have what I call a bow tie. It's where moving averages come together and spread out. And this could be a wonderful pattern when it's coming off of major lows like we had in 2016. So I was very bullish on gold back then. Right now, it's just kind of in a range, but you can see even on a weekly basis, it did really well and made a weekly bow tie. For me to get excited about gold, even though I'm a trend follower, I would actually like to see it go down those maybe new 10-year lows or so, and then look for some kind of reversal pattern again like we had back here. But right now, it's just kind of wide and loose and all over the place. For me to get excited about physical gold, would actually have to break out above in the ETF above 130, and then I could go after it with some trend following type of setups. But for now, I would not run out and buy any physical gold, and I wouldn't run out and buy gold itself. But keep an eye on the gold miners. If this stock, if the GLD or physical gold goes down and starts hitting these multi-year lows, then I think there could definitely be some buying opportunities, but only after the turn. And that's why I like to use those moving averages, so I'm not getting in too early on those type of turns. And also some other patterns that are a little bit more easier or just as easy to recognize, but it's when markets come flying off of lows. I call it a first thrust, but I want to see some serious signal, and I'm not going to bottom fish just because the market is low. Sam, do you have a trade of the week for us this week to look at?
Sure. Let me share my screen here.
Sorry about no warning on that.
Yeah. You guys see my screen?
Yep.
Yep. So this is the Grayscale Bitcoin Investment Trust. It could be found over the counter. It's essentially the first publicly quoted securities that is solely invested in Bitcoin prices and gives you a direct exposure to the Bitcoin market. There's going to be what's called a hard fork in Bitcoin probably in the next couple of weeks. Essentially, a portion of the mining community that's creating Bitcoin is going to fork away, create a new algorithm, and call it Bitcoin Gold. And in that process, we're seeing Bitcoin prices surge as a result. I mean, they're up across the board today. And another thing that I closely watch is the fact that Bitcoin now is above 50% of the total market cap for cryptocurrencies. It's about a $150 billion market. Bitcoin is at roughly over 50%. So I do expect Bitcoin to continue higher this week. And if anyone wants to play the Bitcoin market, one of the best ways you can do it is through the GBTC here, the Bitcoin Investment Trust, which is around $690 as it stands right now. I expect it to go higher this week as the price of Bitcoin continues to move higher. So I am bullish on Bitcoin this week. I am bullish on cryptos. Anyone who wants exposure to the market, perhaps this is one of the vehicles you can use to gain that exposure.
I actually bought my first Bitcoin yesterday just to get a little exposure, get my feet wet. Are you using any active exchanges to trade the? And you can contact me offline if not. But it seems like all of these exchanges are somewhat dubious for what I've seen so far.
So one of the best ones is actually Coinbase. They have around 8 million accounts, and one of the most reputable across the board. Obviously, there are a few, I would say 3 or 4 that are rock solid. The rest, as you said, are a bit dubious. What you can do is you can go to I think it's CoinDesk.com. They have a Bitcoin price index. They take the Bitcoin price based off what 4 of the exchanges are quoting, and those tend to be the most reliable. So Coinbase is one of them. There's a few others there you can take a look at.
I bought some back in November, and I used Coinbase as well.
Yeah, it's remarkably easy to buy. Literally a few clicks, and you can buy. I think you have a weekly total around $2,000 a week. Some people have a little bit more that you can diversify into Bitcoin. So definitely an opportunity there.
Well, they have a they're connected to a trading platform, GDAX. Is that correct?
Mm-hmm. That's correct.
Okay, cool. All right, yeah, I definitely want to. I probably want to contact you offline. I have a few other questions on it, but it's fascinating stuff, and I don't think it's going away now. I think it's here.
Yeah, I mean, if you look at the market objectively, I mean, there are people who say we could be in a bubble, and there may be truth to that. But I mean, the way I look at cryptocurrencies, it's a paradigm shift, and that paradigm shift isn't going away anytime soon. It's a new way to look at value. It's away from centralized banks. So I think that this market is only going to continue to rise, especially now that instead of IPOs, we're seeing ICOs, right? Initial coin offerings. You have company startups using the blockchain to create their own cryptocurrency for investors. So it's a paradigm shift, and I expect it to continue growing.
Wow. Yeah, the blockchain is just absolutely fascinating. We'll definitely have to do a show just on that. Do you have any
thoughts about the changes that China made to their regulations recently? And
That's actually a really good question, Dave. So obviously China banned ICOs, initial coin offerings. They then went ahead and banned Bitcoin exchanges last month. The market cratered after that. It's since recovered. Based on recent news that I'm hearing out of their central news agency, it looks like they will look to regulate Bitcoin exchanges. So they might bring it back, but under a much more regulated structure. So maybe no ICOs, but they look like they're going to be bringing back Bitcoin trading exchanges relatively shortly. So I keep track of the news for that. Also, Chinese investors are already migrating their accounts to Japan, as well as Singapore and some other countries. So it looks like Chinese investors are still going to get their hands on Bitcoin.
Sam, what's the stop? I guess the big question is, what's the stop? Because I know there's Litecoin, Ethereum, and all these other ones. What's the stop from people from creating all these other cryptocurrencies?
Yeah, I mean, there really isn't anything to stop them. Ultimately, it depends on the algorithm and on whether or not people derive value from it. So right now, there's over 1,000 cryptocurrencies, right? I mean, the vast majority of them, I think, will be duds, but there are a good, at least a couple dozen of them that are really, really strong. And in fact, Bitcoin is one of them. Ethereum is probably a stronger one because people are using Ethereum to create their own cryptocurrencies, right? So that's the platform that I'm really watching because they have something called smart contracts. And so Ethereum is one of them. Bitcoin is another one. Litecoin. There's a few others there that are gems that in my opinion. And if you go to actually coinmarketcap.com, you get to see the entire list of cryptocurrencies by market cap. The first dozen or so have potential.
Okay. That Ethereum crash on GDAX was pretty damn scary. It went down to 10 cents. And from what I understand, they don't unwind any orders or anything.
I think it's only 10% of a Bitcoin, Dave.
What's that? Oh,
Like
but it went down to 10 cents though, didn't it?
Well, you got to check if it's in US dollars, because like if you want to buy one share of Ethereum, it's around $300. So they were probably just quoting it as a percentage of Bitcoin. So it'll cost you 0.1 Bitcoin to buy one Ethereum.
Yeah, but there was a big order. Somebody dumped on the market, and it took out 800 stop orders, and it went down to 10 cents a while back. So that's the only thing that kind of scares me is well, derivatives scare me in general because it derives its value from nothing. But if you think about a fiat currency, which I have plenty behind me, they derive their value from nothing, and that's why they're on my wall now, because they were fairly cheap, to accumulate.
Yeah, honestly, there are many ways you can invest or trade in cryptocurrency. You can either buy them and hold them, which is what I'm doing. I'm buying BTC, I'm buying Ethereum, and I'm storing them in my wallet. You can also trade them against fiat currencies, and you can also trade like a forex style trade. You can also trade them against other cryptos as well. So there are different ways you can enter the market. Right now, I'm simply buying and hoarding and putting them into my wallet. So expecting the market to continue higher over the long
term. Do you have a physical wallet, or are you storing it with a?
I do have a physical wallet. It's called Trezor. It's one of the best in the market. Trezor and the Nano, I believe it's called the Nano wallet, are the two of the best ones. You can from pretty much any online wallet, you can transfer them to your hardware wallet and store them for safekeeping.
And when you want to trade off of that, you could just you could transfer it right back to the exchange if you want to.
Yes, absolutely. So all you need is a wallet address, whether it's Coinbase or any other wallet, and you simply send it back there, and you can then trade it back there.
So while it's in the trade, it's out of your control then.
Yeah,
is that correct?
Pretty much.
Yeah, gotcha. It's fascinating, it really is. We definitely need to do a show just on this. And Sam, I appreciate it. That's a good stuff. Okay. Let's go back. Sam, while we have you, any closing thoughts on the markets you trade? Or, we did do trade of the week. I'm sorry. You didn't have do you have a trade of the week now? I forgot. I got so excited about the cryptos.
Yeah, it was the Bitcoin Investment Trust there, the GBT.
Oh, okay. Cool. All right, Neil, you're up next. You have a trade of the week for us?
I do. Let me put it on screen share. See it?
Yeah.
Yeah, just GDX, gold miners. We actually got in a couple days ago back here. Came right down to the 200-day moving average, the bottom of the cloud. And I think we're going to expect to move up to around here, just below the highs. I don't expect it to just go straight up like that when it comes crashing down so hard. You're not technically going to get a move way back up, but GDX or the triple leveraged one, Nugget, I also like. Much the same chart, but it's triple leveraged. And
are you going to follow that on an hourly chart like you were talking about earlier, or you have a hard stop or something on a daily or hard signal?
no, this is just on the daily. So I do go to the hourly chart. Okay, that's the day. We can go to the hour chart, depending on your time frame, you know, how much you trade. Yeah, the hourly chart. So I guess we got in a couple days ago, so that would have been right around here, just as it broke through. So yeah, if you're a swing trader and you want to trade GDX, just as long as it's above the hourly cloud or it gets real close to the old highs, I would get out. Cool. And as you can see here, using the cloud, if you did that before, you know, moving up here, 23 goes up to 25, breaks the cloud here, and then you have this move down. You usually get about 3 to 5 moves down up to the cloud, rally to resistance, rally to resistance.
Gotcha. Cool. Okay, Jim, you have a trade of the week for us?
Yeah, well, rather than trade of the week, I generally point people in directions, encourage them to look into some option strategies that might make sense for them to investigate. Just a quick overview. Last week's ranges in some of these markets I think are kind of important, so I would keep an eye on them. The transports had a high of 10,000 and a low of about 98.50. This morning we did test that low area, bounced off of it, but certainly it's lost some altitude from last week's high. S&P 25.52, 25.17. The 10-year note, 2.4, 2.3, and gold, 1280, 1260. I think whichever way they break out of the ranges of last week might be interesting to see if it'll obviously extend more dramatically out of that range. So those prices from last week I think are kind of important. Yeah, one thing on that Bitcoin thing, I was listening to an interview with John McAfee, who's getting involved with, I guess, mining of Bitcoins, and he you know, respectfully disagreed with that Jamie Dimon, who said it's a fraud. And he said basically he feels like it's like the early stages of the internet where there's going to be a lot of changes, a lot of volatility, but it's not going to be going away. And I think that's pretty accurate. And that's why guys like Mark Cuban are jumping into it a little bit with that company, Mercury Protocol. And so I think that's adding more credence the more that these kind of people are getting involed a bit.
I gotta laugh because isn't the central bank a fraud, creating money out of nothing?
Well, exactly, and that's what
all their money.
That's what McAfee was saying. He said to create a Bitcoin.
Is it the opposite?
Yeah, create a Bitcoin, I think costs a certain amount of money to create one Bitcoin. Where to create a dollar bill, it takes ink and paper. That was his whole point.
It's funny,
and that was a pretty good point.
I thought it was
Neil, don't confuse the issue with facts, please. Yeah.
It's funny because Jamie Dimon called it a fraud, and at the same time, his firm is also facilitating trading in Bitcoin, which I found was hilarious. So
yeah, no, that was a joke. Yeah.
Anyway, like when they were shorting their own AAA recommendations in 2008 and 9
exactly.
to hedge their.
Anyway, I just want to just real quickly go over a couple things. If you're in the market, sure, you know, and you want to kind of limit your risk a little bit, looking at collars and put hedges is not a bad idea at this point. And even considering replacing some stocks with some calls, because you got the VIX down at 9, so the calls are very dirt cheap in many cases. So if you wanted to kind of reduce your risk a little bit that way, that would be something to look into. And if you're out of the market, these credit put spreads have been obviously past performance, not indicative of what's going to happen, but those credit put spreads have been obviously pretty consistent for the last 2 years. And also some people are liking to use calls because they're so cheap in lieu of stops on some of their positions because, you know, maybe they wouldn't get stopped out as quickly or something like that, but they still have a cap on the risk by using a call or a put against their position. So those are a couple of things. And the last thing, of course, is strangles. You know, that range I was talking about, 25.52 and 25.17. You know, in the weeks to come with the news that are supposed to be hitting the fan, you would think it unlikely that the market not move at all off of this 25.50 number. So, you know, investigate what a strangle might be, and then at least you could be dead wrong on one side, but maybe hit something out of the park on the other.
Okay, cool. A lot of moving parts. So, yeah, get educated on that. As far as the trade of the week, I like these oil stocks right now. Some of these more speculative ones I find very interesting. This one has an HV, I don't know if you can see it on your screen or not, of 98, so it means it's very volatile. But it has a lot of the characteristics that I've kind of mentioned throughout today. If you take a look at the bow ties, you can see that it bow tied off of major lows. and then it's pulled back a little bit. And it's also what I call a first thrust. It made a big thrust off of lows, and now it's pulled back. I don't buy things during the pullback. In other words, I'm not a reversion to the mean player. And then somebody argued with me and said I am, but I am in a sense that I would wait for an entry. So you'd probably want an entry somewhere in here, and then obviously on all trades you could be wrong. On any trade you could be wrong. So you want to stop down here and maybe a profit target of about 250 or so, at least initially. And longer term, I think this has the potential to possibly double or more. But again, there is a risk of loss in trading, obviously, and all those other disclaimers. But I think these energy stocks right now, I'm liking them a lot. We're long CRC already off a similar pattern, and we're looking to buy some of these other ones that are just coming off the lows like this. So that's your trade of the week. Sam, let's go back to you. Any closing thoughts or anything you want to tell us about tradinggods.net before we take off here in a few minutes?
Well, as I mentioned earlier, Trading Gods is actively engaged in the VIX market, the volatility market. If you go over to tradinggods.net, we do have a program called the VIX Trader, giving you the A to Z on how to trade volatility as an asset, how to include it in your portfolio. We are now also developing a program on Bitcoin, and we're also tracking the market on a weekly and a daily basis on tradinggods.net. So Monday, Wednesday, Friday, we're publishing articles on Bitcoin, and we're going to be introducing some more resources for helping you enter the cryptocurrency market through the Grayscale Investment Trust and other assets as well.
Okay, cool. Yeah, I might want to contact you offline if you don't mind. Ask you a couple questions, and that'd be awesome. Thanks.
Great.
Okay, let's go over to you, Neil. Any closing thoughts or anything else you want to tell us about TradeReview.com?
Yeah, go to my website, sign up. You'll get some free software on how to position size your trades based on a stop point. It's more effective than equal weight. And I think it's really good for portfolio management. And I just think it's going to be a sideways week. But we got a lot of fast sector rotation these days. I think it's kind of more of a trading market, to be honest, at least right now. And if your neighbor who's never bought stocks asks you how to start buying stocks, then sell all your stocks.
That's usually a sign. You know what's scary? You know what's scary is I think the Economist had a picture of a bull, and it said bull market and everything. So it's like, oh great,
yeah.
You know, kiss of death.
That's a perfect. Economist is famous for perfect contrarian covers. Did you know that?
Yeah, well,
you do the opposite of the Economist, and you're rich. That's true.
Okay, let's go over to you, Jim. Any closing thoughts or anything?
Yeah, anybody who'd like to get some more information on the different uses and risks of all the different ways you can use options, you can shoot us, shoot Option Professor an email at optionprofessor@gmail.com, and we'll try to get some details over to you. And just wanted to wish everybody good luck and good trading this week.
All right, good advice and good, very nice. Again, I'm Dave Landry from DaveLandry.com. It's kind of a long link, and I'll probably shorten it to DaveLandry.com/CFN to reflect the new name of the show. But if you go to Timing Research Special Offers, you can get a $100 gift certificate there, which is actually reusable, so you can get all 3 of my books. And it's good for anything in the store that's at regular price. Any questions, Dave@DaveLandry.com. Check out my website. I've got 6 articles on the homepage, or videos, or podcasts thereof, a mixture thereof. And then there's about 500 buried within the website, and the 1,500 or 1,600 YouTubes, I've lost count. So get to know me first, and if you like what you see, I have a trading service and also have some courses on the site. I want to thank everyone. I'll let David Kosminder close it down, but this is a great show, and I was pretty excited to see this lineup, and I think this is one of the better shows, if I say so myself. But thank you guys. As usual, I learned a lot. I got a lot of notes here. I'm looking forward to doing some research on some of these things. So once again, Jim, Neil, Sam, thanks a lot. Thank you, Dave Kosminder, for having me back, and I'll let David go ahead and close the show up. Thank you, David.
Yeah, thanks, guys. Great show. Just want to remind everyone to be sure to hit the YouTube subscribe button. Get updates on future shows. Also, be sure to join us tomorrow night. That'll be October 10th, 9 p.m. Eastern Time, for the 7th episode of Analyze Your Trade, where you can submit your trade ideas, and we talk about them live on the show. Dave will be moderating again tomorrow night, and we will also have John Thomas, Stephen Place, and Lance Ippolito. So just want to thank all my guests again for today's show. Sam Bourgi of TradingGods.net, Neil Batho of TraderReview.net, Jim Kenney of OptionProfessor.com, and Dave Landry of DaveLandry.com. Thanks, everyone.
Thank you.
Thanks, guys. Have a great one.